Welcome back to the Wall Street Podcast. Today we're digging into a report from Goldman Sachs dated September 14th on NetEase Inc.
That's right. They're maintaining a buy recommendation.
Fueled by, it seems, some very strong legacy game performance and a promising new pipeline. We want to pull out the key investment insights for you.
Exactly. Goldman Sachs is holding that buy rating, and they've actually raised their 12-month price targets. We're looking at US $161 or HK $252 now.
And NTES shares have had quite a run.
Oh, absolutely. Up 74% year to date, plus another, or is it 19% surge just after the Q2 2025 results came out?
That's substantial. So what's the justification? I mean, where's this strength coming from, especially thinking about its current valuation?
Well, the valuation currently around 16 to 17 times the 12-month forward PE.
Price to earnings, yes.
Right. That's actually seen as pretty attractive in this context. It's really supported by two main pillars: the continued strength of their older Evergreen games and what looks like a favorable product cycle coming up with new games in 2026. So the risk-reward profile looks quite strong.
Let's unpack that Evergreen game idea. It's genuinely surprising, isn't it? A game that's over 20 years old, seeing growth. Yeah. What exactly is NetEase doing right with these older titles?
It is fascinating. Take Fantasy Westward's Journey PC. Its player base grew 15%, hitting 3.15 million concurrent users.
In just 3 months.
In just 3 months. And this wasn't accidental. They launched a new server, got rid of the prepaid game card.
Lowering the barrier to entry, essentially.
Exactly. Simplified some gameplay elements and then leveraged KOL live streaming influencer marketing, basically. It really broadened the game's reach, even after 2 decades. And since it's a high-margin title, that, plus growth from Eggy Party, should really help profits in the second half of 2025.
That's smart lifecycle management.
Oh.
Okay, now looking ahead, the pipeline. That's crucial for the re-rating Goldman talks about. We're talking brand new IPs here, or more like extensions? What's the potential impact?
The pipeline is definitely key. There are 2 potential blockbusters on the horizon. First, Sea of Remnants. That's slated for a global cross-platform launch in 2026. And second, Ananta. We should get more details on that at the Tokyo Game Show later this month, September.
And these are mostly new IPs?
Primarily new offerings, yes, though likely building on popular genres. The expectation is they'll drive significant future sales growth, kind of the next chapter for NetEase.
Got it. All right, shifting to the financials. Goldman raised their EPS projections. What drove those adjustments? And importantly, what are the risks they highlighted? Any risks you think the market might be overlooking?
Sure. Goldman bumped up their 2025 to 2027 earnings per share estimates by about 2-3%.
Okay.
That's mostly down to stronger projected game revenue, particularly from Fantasy Westward's Journey, and consequently higher gross profit margins.
Makes sense. And the risks?
The usual suspects are there, but worth noting. Legacy games could weaken, naturally. New games might monetize slower than hoped. Competition is always a factor across all segments, and content and advertising costs could rise.
Which of those feels most potent right now?
You know, given the high expectations baked into that pipeline, I'd say the risk of slower than expected monetization for the new games might be the one the market is slightly underestimating.
Interesting point. Okay, we've covered the financials, the games. Let's maybe zoom out. This NetEase story, it's not just numbers on a screen, right? It tells us something about digital content and how we consume it. What are the broader takeaways here?
Absolutely. Beyond the investment thesis, NetEase's strategy, especially with reviving that old game, it's a real case study in digital entertainment trends.
How so?
Well, think about it. Lowering barriers, using influencers for a decades-old product. It shows how digital content can find new life, new audiences. It impacts how consumers like you engage, how online communities form, and ultimately how companies capture our leisure time and spending. It shows how even seemingly old IP can be revitalized.
So lessons there for almost any digital business, not just gaming.
Precisely. It's about adapting and understanding contemporary engagement tactics.
This has been a great deep dive. It really highlights that balancing act, leveraging proven assets while pushing for genuine innovation. Something for you, our listeners, to consider. In this fast-moving market, just how resilient are these digital IPs? And what truly defines entertainment value that lasts? Until next time on the Wall Street Podcast.